and welcome to the show where we share the stories of the many who intersect with our healthcare system but are rarely heard from. My name is Kevin Poe, founder and editor of KevinMD. Today on the show, we have Chen. She's an internal medicine physician. She's a hospitalist. She's also the founder of The Real Estate Physician. She wrote the KevinMD articles, The Benefits of Passive over Active Investing for Busy Professionals, and Real Estate Syndication 101, A Physician's Guide. Cherry, welcome to the show.
Hi, Kevin. Thanks a lot for having me. I look forward to sharing with your audience.
So we'll get into your articles in a little bit, but first off, tell me your story and your journey to where you are today.
Yeah, I would say I'm probably like most of our audience, physicians. So pretty linear path, like pre-med, go to med school, go to residency, all of it is kind of laid out for you. And so I'm now 6 years out of training. I'm a full-time internal medicine hospitalist. And really, I got into, my side gig or the real estate physician basically out of my own curiosity and discovering what was there to do with my money outside of 401k, the traditional stuff we're taught for. And it was just personal self-discovery and curiosity, which led me down that path and further discovering how real estate was a great vehicle. That's basically how it started. So like most of us, we don't know or don't take time to explore because we're so busy with our clinical lives. But there's a lot of other ways to basically for physicians to put your money to work outside of the traditional Wall Street.
Now, when you started a real estate physician, did you have any outside training or did you have any background in real estate?
Not at all. And so I've, no training, no classes, no financial education besides, what I saw my parents do, they were entrepreneurs. But otherwise, the great thing about today, and I just feel like I have no excuse not to learn, right? Podcasts like this, blogs, forums, there's so much you can learn out there. And so basically I just took, when I'm not working, I learned about all of this to try to synthesize and, try to make sense, for me, what does that mean? Because as I learned is that, everyone's financial situation is so different. And so you have to kind of take what everyone else says and try to see how it fits into your own situation, basically.
So let's get into your KevinMD articles. The benefits of passive over active investing for busy professionals. So can you explain to my audience what is passive investing and why should physicians care about that?
Yeah, I mean, so, you'll hear things like nothing really is passive in life, just even the act of breathing, right? It's not a passive movement even. But passive investing or passive income for most people means that, your money is working for you independent of your time or effort. And I think now as physicians, whether we are burnt out or we want fewer clinical hours to spend time with family or other interests, that is there's been a lot of interest in how you can obtain more passive income so you have more independence of your time. So that's what was for me, starting out, 4 years ago, that wasn't my goal, but I did not want to be an active manager of properties. I wanted my money to go to work for me. That's where I learned, delineate, time freedom and how do I want to be how active or how passive? And I look at it and tell our investors now is, the opportunity cost of not only your capital when you're investing into real estate or the stock market, but also the opportunity cost of your time, of your efforts. And just like in medicine, we leverage, a whole team. Same thing as in real estate. And so that was the point of the article to help people see, when you're investing in real estate, there's the loans you have to sign on, there's the property management, managing tenants, and how all of that interplays into not just your capital, but of your time and your effort.
So I've read a lot about passive investing on the various physician forums on Facebook, and I know that people can have passive income from social media, from starting podcasts, from writing, from speaking, and of course in real estate. So there are different types of real estate investments, as I understand. I was wondering if you could share with my audience the different ways that physicians can obtain passive income from real estate.
Yeah. So that's like real estate is so broad. Like when I started, I thought, oh, I get a single family rental. I had Airbnb and I got all excited. But there's so much to real estate. You'll hear people who do fix and flip, people who do wholesaling, but those are more active roles. You're always looking for a deal, you're always closing, always selling, and people say that's basically another job. But you can do real estate as a passive income, meaning you are leveraging somebody else's time and efforts, right? The people, like for instance, we do syndications, and so you have a 100-unit apartment complex. And how is that passive? Well, you are a passive investor. You don't have to hunt for the deal. You don't have to sign on the loan. You don't have to manage the property. You don't have to take any calls. You don't have any liability. So that's what makes it passive, as far as you putting your money and then it's working for you, and somebody else's efforts are helping you generate the returns.
And a lot of physicians who may be listening to podcasts may think to themselves, this sounds pretty good. Now, where are some ways they can get started with real estate syndications, and how can they educate themselves in terms of who's a good syndicator?
Yeah, no, great question, because I think when it comes to investing, it's trust, like what's a good deal or who's operating. And so the great thing, like I said, is there's podcasts. That's how I learned. They're free podcasts, blogs, conferences you can go to meet these operators, and it just depends, well, how much time do you want to put into that? And basically, when I started the real estate physician about 3.5 years ago, or two years ago now, is that there was not really something that I think was curated towards my needs as a physician in limited time, but you have the capital to invest, right? So basically, that's why I started the group, understanding, basically what were my needs as far as trust, having a vetted process. And so what a lot of people do is you have free education out there. And I think anything else in life, just like we have mentors in medicine, is there's always somebody out there who's done it before you or does what you want to do. So the great thing is you can reach out, to me or you, and with, starting podcasts, whatever you want to do, there's somebody who's done it and can help guide you along. And that's basically the point of the real estate physician group.
So just to give some frame of reference, so what kind of returns are we talking about compared to, say, a total stock market fund? What kind of risk are we dealing with? What kind of returns are we expecting when we talk about real estate versus a traditional stock market index fund?
Right. So yeah, we'll start with risk, because that's what, is probably on most people's minds, is that, when you're investing into a syndication investment, for instance, the average minimum is $50,000. That's a good chunk of money. When you're putting into an apartment complex and, pooling investors together to purchase like a $10 million property, the biggest risk is that, you lose your investment, the $50,000 you put in. So that is always the risk. Ideally, and most time that does not happen, because you are buying a property that people live in, people are already paying rent, you have operators, there's a track record you can vet, and it's a tangible property, right? It's not a piece of paper that can, vanish or decrease in 30% value overnight. So the biggest risk is that losing your money. Difference between that versus, like, say, a single family is, I think when you get a single family rental, you are not only at risk for losing your initial investment, but the ongoing costs. If you don't rent it out, all the liabilities of keeping up a property, finding a tenant, or damages, you're at risk for losing much more than your initial investment per se. And then you're also liable. So those are kind of, some big differences as far as that. Typical returns, we're seeing, as far as, I would say what the main goals are, that we are trying to double investors' money in about 5 to 7 year time period. Those are what we see as, achievable and realistic goals based on the investment that we do. And so those are pretty attractive versus what you can find elsewhere. Of course, the risk being you could lose your whole investment if it's a, terrible project or something like that.
If you do choose to invest in a real estate syndication, how liquid is your money during that investment, and how long is a typical time frame?
Yeah, so typical time frame, we say about 5 to 7 years. There's ranges from 3 to 10. The money, we say, is pretty illiquid. It's real estate. It's not like you can sell it tomorrow morning if you wanted to, especially with lots of investors. So the money you put into these foreseeably is money you do not have plans for the next 5 to 7 years. If you're going to get married or purchase a house, you don't want to put that money in here. So it's considered illiquid. There are provisions usually in the contract where if you had to take it out, we can make considerations, but we tell investors you would not put the money you would want to use in that time frame in. Pretty illiquid. The other factor to consider is control. And it's kind of, I think it's a double-sided coin, where people say, well, you don't have a control as a passive investor. You don't get to call the shots. Like, how much does this unit rent for? Do I want to use this contractor, and etc. But I see that as a benefit, and that's why I invest in these syndications, is because I don't want that control. I don't want to have to make those decisions. So for people who want that control, who don't want to let it go to somebody else who I think has more experience and knowledge than me, then syndication is probably not a good fit either.
So whenever I scroll down my Facebook feed, I'm getting a lot of ads for real estate crowdfunding sites.
Yeah.
Now, how are those different from what you're talking about with syndications?
Yeah, so crowdfunding, has been great as far as, helping people raise funds for projects that otherwise everyday investor, would not have had the opportunity to do. The pros and cons. So crowdfunding is like a platform, right? It's just like you go, you want to buy a stock, or I look at 100 projects. They kind of all look the same to me. I've never invested through crowdfunding, but I've explored those options. It's, one, it's their platform. So you always look at how people get paid, right? So they get a fee from the sponsors who do these projects to advertise their projects. And sometimes they take a fee from investors for managing, I think, the projects, right? Their portfolio. But they don't have skin in the game. They're not invested into the project. They do some research, and some do a better job than others. But you're not really directly talking to the sponsor of the project. And for instance, CrowdStreet, they're not directly invested into the project. They're just a platform for people to have access. What we do is called private syndication. Is I'm invested in these deals. These are true partners where we do the due diligence. We understand how they actually got those returns, because on crowdfunding sites you'll see 10% returns or 20% IR, and they all start looking the same. And we say, anybody can project, right? We're all making projections, but it's, what are the assumptions? How do they get those numbers? What is the process? That's what's important for investors to see who is behind the project, rather than some projected number that is, 5 years into the future, where a lot of people can put that on Excel, but it's to truly understand how they got there.
Now, for those in the audience who may be interested in going forward, what's your number one tip for clinicians who are interested in dipping their toes into real estate investing?
I would say, of course, education, right? You have to be an informed investor, and that's what we try to do through the platform. But it's understanding, I think, your philosophy. Just because, syndication is a great fit for me, I love it. I love the passive nature of putting my money to work. It might not be a great fit for you, right? And because you have different goals. Like I'm trying to build up passive income, so I can maybe take a couple days off a month from my clinical practice, right? So the most important, I think, is not to just say, for a lot of people, you're like, oh, those sound like great returns, let me jump in, right? Because it might not be a good fit for you. So one is just to truly understand, what are your goals? What is your risk tolerance? And what exactly are you trying to achieve with this investment? Because it's just a vehicle. Real estate is one way of many, and even within real estate, there are so many ways for different kinds of returns, right? So it's just being informed and really having, I think, exposure, which I think is great with podcasts and books, is that, well, what are other people doing, and what are the pros and cons? Does that fit me?
And is there something that you know now that you wish you knew back before you started investing in real estate?
I don't know. I think the most important, because even when I jumped into my first syndication, there's things I definitely did not know when I invested, right? And so you don't know until you jump in, you actually have money and skin in the game, right? Because a lot of us can, analyze, forever. But really, I think it's just, I would say the best is just exposure and learning, whether that through your own experience or somebody else's experience and mistakes, so you can learn to avoid those.
So we're talking to Chen. She's an internal medicine physician, and she's also founder of the Real Estate Physician. Cherry, what is your take-home message for the KevinMD audience?
My take-home message is to really just understand your goals and your philosophy, and how investments are supposed to enhance your life, and to really be clear, have focus and clarity on your what is it you want your money to do for you.
And how can people reach you?
TheRealEstatePhysician.com is the website. So that's the best way. And I love connecting with individual physicians. That's basically what I do. So hop on a call. Happy to share my own experiences, mistakes, and what I know from the last, I guess, 4 years investing. Yeah.
All right. Thank you so much for your insight, and thank you for joining me on the show.
Thanks for having me, Kevin.